Alright guys, welcome back. This week, after going through the dollar yen and the pound yen in the previous videos, and you guys seem to really enjoy that, we earned a decent profit off of those pairs, I thought, well, why not finish it off with the euro yen? This week in the London Live Room, we're paying particular attention to the euro yen and the next best shorting opportunity on that pair. And on Friday, we had a free live room. We opened up the live room to everyone in a kills room, and also free for anyone that wanted to join the room. And there ended up being around 250 to 300 people in there at one point on Friday. So lots of great feedback since then, saying how much you guys enjoyed the analysis and what we do in that room every day. So I thought I'd give you another insight into the room from this week, looking at the euro yen and also the Aussie dollar and what might be a decent trading opportunity going into next week. So something for you guys to pay attention to on the open. So sit back and enjoy the analysis. Let's go over to euro yen. On the daily, we identified the next level of support, didn't we? Down at this 120 level, and we say 120 because that's the even handle number, very close to this most, the lowest support level down here. So what we do is we draw a line in at 120, and that's where we're predicting that the market's likely to go before we see any reaction or bounce back. Okay, so potentially we're at market here, 124.50s, 124.40s, and we're looking for a potential move down to 120s. Okay, so 400 odd pips down here. Nice room for a bit of profit. Question is, how do we get involved? We know that market's either going to go straight down here. We don't know, but we're predicting market's either going to go straight down here or have a slight retracement, a pullback, and then we can look to get short. So what we do is we do the same thing. Where is previous support? Okay. 1, 2. Previous support. Okay. Fibonacci retracements. 382. Remember, we're building out this kill zone, which is based on how all the other traders are thinking, where they're looking to sell this market. Okay. We can take a Fibonacci retracement from this most recent swing high. What do you think we're going to get? 618 in that zone as well. So already we've got structure, which is the most powerful thing. We've got two major Fibonacci levels, Fibonacci ratios lining up in the same zone. What else can we do? Extensions. Yeah. Okay, so Fibonacci extension from the most recent low to this swing high. What you calling? Wow. 1618 up in that zone. Anything else? Free drives, harmonic move. Anything else? 126 flat. Boom. So the next thing I do is I say, well, what is the aggressive entry reward to risk like? Now, if my stops have to go above this high and my targets are going down at previous lows, do I get a good risk reward? A good reward to risk ratio? Well, do I? Yeah. 1 1/3. 1 1/3 to 1. So if we get up into this level And only if we get up into this level, I will be looking to short the market here. Sorry, this risk is going to be far too much for me. So what I'll do is once price action gets up here, if it gets up here, I'll be looking for extra confirmation in this area. And by that, I mean a retest of this level. A valid double top at this level. My stops will be above the double top. So it'll be something like this. Look good? And because we're looking for a move down to here, this is the next level of support, I'm going to be taking target 1s here. And in target 2s, I'm just going to let ride. And I'll trail my stops. You can find the reason for entry into market at any given time. You can look at any chart and really find a reason to enter a trade. You'll sit there and you'll think, well, this candle looks good. You know, we're at this, we've touched this previous doji candle out on the daily, and you know, this we could get short here and put targets here and stops here. We want to filter out only the highest probable trading opportunities where not only are we right much more than we're wrong, but it offers us a massive reward compared to the risk we're putting at stake. Because if you do that every time you place a trade, you're absolutely, as long as you trade that with ultimate discipline, you're onto a winner. So what I'll do is I'll just trail my stops. I'll let it ride. And what I'll do is I'll trail my stops. So as we come down, okay, if we break and close below, then we do something like this and break and close below here, well, all of a sudden my stops get rolled to above this high. And if we break and close below here, my stops get rolled to above this high. Okay. Break and close. Roll my stops. Can you do the fib extension again, please? Yeah, sure. You bring on the Fibonacci extension tool, and in this instance, you will go from swing low to swing high, back down, and you get a 1414 in there as well. We didn't actually do that, but you can see that that's another ratio that's right in the middle of that zone. Looks good to me, guys. And what do we do until then? What do you think I'm going to do until then? Just sell it? Buy it? Nothing. Absolutely nothing. Apart from come back and check what's going on and keep my eye on it. Okay, and look at this risk reward. You can risk something like 50 to 60 pips to gain 350 pips. So I can be wrong 7 times and still break even by taking these trades every time they present themselves. 5, 6, 7. Good stuff, right? Okay, guys, so that was the Euro Yen. Hope you enjoyed that analysis there. That finishes off the yen pairs in my portfolio. But really, I just wanted to give you an insight into what to pay attention to going into next week. And also the difference in when we're looking at a shoot for extended targets, an extended move rather, and the difference between that and when we're only shooting for a retest of previous support. So hopefully you can get some value from that. And I just want to run through with you next something on the Aussie dollar where we were able to earn a profit out of this pair and also be ahead of the market. I want to show you the importance of being ahead of the market by doing your analysis consistently, your post-market analysis, pre-market analysis, and just by being that one step ahead of the market, it can allow you to take all of that decision making out of your trading. You're not reacting in the moment, and it allows you to be really one step ahead of the game in order to earn a decent profit out of the market. So sit back, enjoy this last bit of analysis, and I'll speak to you in a minute. We've come down and tested this level here. Okay, how else can we get involved in a long opportunity? We've put in this higher close. So what we do is we scrap our analysis. Okay, we move on and we start drawing out the next potential opportunity for a long trade. Now, first thing I'll do is bring on this harmonic move, and you can see that we've got this. You see that we've got this ABCD pattern down here at 7100. Number we should pay attention to. Okay, and then we can bring on Fibonacci extension. Okay, got a 1414 down there, right in that zone. We've got a 1414 down there. If we bring on a Fibonacci extension and use it as a Fibonacci inversion, well, look at that. If we bring on our Fibonacci retracement tool, there's two ratios to pay attention to here. One is the 786, which is in that zone, but that's a minor Fibonacci level, and so is the 886. But the 886 has a bit more relevance. Can anyone know why? Has a bit more relevance in what we're talking about here. Bat pattern. Yeah. So, if we push down, okay, to this zone here, whether you trade bat patterns or not, we've got a good potential shorting long opportunity down here. Okay. Even handle number, tick. Fibonacci inversion, 1618, tick. 1414 extension lining up in that on that line as well. Okay, and we've got a 786 and a bat pattern in that area. And this is why it's so good to be ahead of the market, because not only do we know that if market pushes down, we're going to get involved anyway. If you trade advanced patterns like I do, you're going to get involved anyway, right? But this is a good area to pay attention to. If we don't quite push down to the 886, I'll be eyeballing how market reacts in this area here. If market pushes down, we know where we're looking to get long. Well, what about if market just pushes up? Is there any opportunities up there for us that have a high probability of being right? Well, anyone see it? We've got a bat pattern waiting for us up there as well. So if market pushes up, we're getting involved. If market pushes down, we're getting involved. Yeah, we got filled for the bat pattern, the bearish bat pattern. Great to be ahead of the market, right, guys? Yesterday morning we had a lot of long opportunities setting up, and we also had this bearish bat pattern up here as well. So got filled this. Hit target ones this morning for 28 pips. And we're looking for target 2s, which will give us around 53 pips, I think. So there we have it. Okay, guys, so just to update you, after earning a nice profit off of the bat pattern, and we're now pushing down into that area that we were identifying for the next long opportunity. So something to pay attention to into next week. And really, I hope you understand the importance of doing this pre-market analysis, post-market analysis, and going through your pairs, analysing the markets consistently, because it really does allow you to be ahead of the game. You can see that now if market pushes down here, we've done all of our hard work. All the hard work's already been done. All we need to do is, if we get our rules met, we enter the trade. So we'll see what happens with this going into next week, and I'll talk to you soon. Okay guys, so that's it. That was the Euro Yen and the Aussie Dollar. Hopefully you got some value from that analysis. And remember, if you want to join us in the London Live Room, it's absolutely free for a week. All you have to do is go to www.tradingpowered.co.uk. The link is here below, and I'll see you in there. Don't forget to subscribe to this video as well. Subscribe to this YouTube channel. We want to get this message out to as many traders out there that are struggling. We want to teach them how to go about trading and learning how to trade the right way. So until next time, guys, have a great week in the markets, and I'll talk to you soon.